As always, guys, this is just for entertainment purposes only. This is not financial advice. Hey guys, and welcome back to my channel. I wanted to go over what you might call a boring stock, but was once very loved by tech investors around the area of dot-com bubble, of course. But um, now it's a very mature company. It's sometimes a bit boring because when you're looking at the other chip producers, their stocks have been soaring, AMD has been soaring, Nvidia has been soaring, and Intel's, yeah, it's doing nothing. It's dropping a little bit, playing catch up, and I'm wondering, like, is that going to change? Is this stock going to become more exciting? Um, so I went through their latest earnings presentation and to try, I've been watching this stock for a while and I'm trying to determine, is it the time to buy right now? I definitely can see that Intel is producing a lot of value, and so I can see definitely the appeal for value investors. But I'm also a bit of a growth investor, so I also want to see some excitement for the future. I want to see that they are investing in the latest technology. Um, but let's first quickly go over this, and then we'll dive into yeah, both the outlook and yeah, what we can expect for next year, for 2023 up to 2025. So firstly, they're saying it's the best year ever, so in terms of revenue, but what we're also seeing, of course, is a growth slowdown. It's been slowing down for many years. We're seeing that their margin is dropping, will continue to drop, and their earnings per share are also dropping. So yeah, there is a very good year, so 74 billion in revenue, but at the same time it's slowing down, and we need to see some growth or some growth expectations, right, for this, because we don't want to invest in a dying company. Where is the slowdown coming from? Well, the first thing is the client computing group. What we're seeing is a decline in revenue growth there, and the earnings, they're kind of explaining that, because even though the market in general market is doing very well, so there's a small decline here with Intel. Um, so there's a decline. Another area that's doing very well is their data group. Although the margins are slowing, we do see a big revenue income. So that's an okay thing. And another thing that we're seeing a lot of growth, a lot more growth than the rest of their things. That's the Internet of Things, and for MobilEye as well a little bit. So Internet of Things grew 36%, so that's pretty good. And operating income 120%, driven by COVID recovery. And MobilEye, I'm going to go into that deeper in a bit. But MobilEye grew 7% year over year, so not spectacular. But yeah, for some reason they are thinking that this is going to grow immensely the coming years, and I'm going to come back to that later. Um, so in Q1 2022 outlook, what do we see? We are seeing that there is a small, very small revenue growth. So it's even smaller than this year. So prepare for a few quarters where that might be a dumper. And then the margins are shrinking again. So we are from 56 to 52. And then the profit is also declining. So that's all things, yeah. When you're reading this, it's not nice to read. So you have to look 2022, and I think that's probably why the stock has been trending down. People are seeing less and less revenue growth, and they didn't really have anything to look forward to in 2021. 2021 they had in 2022 to look forward to, which was not going to be a very spectacular year. And I think in 2022 they have a lot to look forward to, and that's why Intel caught my eye now as a stock that I could potentially invest in. Um, So I first would like to say something about MobilEye. So in the earnings call, they talk about that MobilEye grew more than 40% year over year. What is MobilEye exactly? So MobilEye, it's oh, I had put some things here, but MobilEye, it's a company that's basically an automated driving. It's being used by 30 cars, 30 automakers this year. Uh, they have secured 41 advanced driver assistance programs. So they're growing very fast, almost double digits, almost every single year. You see 36% growth year over year. That's also stressed here. MobilEye grew more than 40% year on year in 2021. So they have incredible growth. They also have yeah, that on the autonomous driving side, because they're doing two things. They're on the one hand, they're making chips, but the second thing they're making is production-ready robot taxis this year. So they are starting to test robot taxis all across the world. The latest being in Paris. Have a look at this movie.
Losing time, I'm fading fast. I just wanna make it last. Try to let go of the past. I close my eyes, embrace the blast. Sleepless nights and headache stack. Restlessness to hell and back. What's my purpose? What do I grab? A slippery surface, a heart attack. And sometimes you just gotta believe there's something that'll give you relief. There's something that'll have what you need, what you need. We're broken, it's tragic, we're not all elastic, but maybe there's magic. Believe you could have it, and I know of sadness, the anxious and panic, the infinite vastness of all that is blackness.
So of course what we're seeing at this movie is that this car is driving pretty much autonomous. Something that I like to see. I really believe in autonomous driving. I think we're going to get it. And I think MobilEye, it's probably one of the best positioned to be in to take advantage of autonomous driving because of the massive amount of deals had with car manufacturers. And currently it's completely owned by Intel, but Intel is thinking to make it go for an IPO in 2022. It's actually planning that, and it thinks that it could value MobilEye at more than 50 billion. 50 billion, so that's a lot. So in 2022, if it keeps on 30% growing, we're looking at 30 times price over sales. Now Intel acquired it for 15.3 billion in 2017. However, at the time, I think it acquired it at 20 times sales, 20 times forward sales. So why now is it trying to sell it at 30 times forward sales? And in the current market, because the market has not been very kind for these kind of stocks. But maybe Intel knows something that we don't. Maybe there's a reason why it's valuing that much. Well, one is, of course, that we're seeing car companies being valued immensely. Look at Tesla. Look at Tesla, of course, a nice example. But that could be a reason why it's valuing it that high. I think Tesla at one point was valued 160 times over sales, so even more highly valued than MobilEye. It's not clear what will happen to the money that Intel gets for it. It could be distributing shares to shareholders, could be using the money for investing. So that remains to be seen. But generally, like, I think this could be a really nice catalyst for the stock in 2022, despite of all the bad news that might come in because of slowdown in growth in 2022. But as I said, I'm going to look past 2022. I'm going to look at 2023, 24, and even 25, and then we'll see that there is a light at the end of the tunnel, and it is not a train. So another thing, Internet of Things. As I said in the presentation, it's growing quite fast. Had a record year, so Intel did a really good job that. They also mention supply chain issues, shortages. They do expect that to persist next year and the year after, with incremental improvements over this period. So right now, I think this quarter, almost all companies we expected to have supply chain issues and bad news after bad news. That is not something we like to see, but I do believe that in the next quarters in Intel, but also in other companies are going to start reporting, oh, it's getting better. It's getting better. Countries are reopening. Supply chain pressure is easing. Intel does mention they are lucky because they do control most of their supply chain. So that's a positive thing for that. And then they also talk about their innovation, and that's one of the reasons we see their earnings drop. So we'll see their earnings drop so much in 2022 because they're investing a lot in innovation, and they do think on chips. They want to get process performance parity by 2024 with AMD, with NVIDIA, and unquestioned leadership by 2025. So they want to get back to where they were, but of course that costs money, and I think that's fine. I personally like to see a company that's investing in its future. I'm going to scroll down a little bit because there were a few interesting questions in this earnings presentation that I think you should know about, and basically their answers. So here they also say, again, on that investments in the chips, they need to be able to put the capital in place by 24-25. You need to be building the shells in 22-23. So that's what we're going to see the coming year and the year after, that will start. The production will start maybe even in 23, but probably in 24 and 25. So that's when we're going to see nice revenue increases. And also it means that once they do have that leadership position in terms of technology, they could increase their margins again to maybe 55%. Right now they're going to be at 51-53% range. But I think you have more pricing power when you are the best. It's that simple. What else was important here? So here again they're saying we're running on very mature nodes on well past the time that normal cycle should be, and that's why we're aggressively investing. That's they are really aware that their technology is behind, but they do believe in 2 to 3 years they will have catched up. And to remind me a little bit of Microsoft, it was like a stock that almost did nothing for many years, and then suddenly they started to innovate, came with their cloud business, and look, now the stock is 10 times higher than what it was. I'm not saying that Intel will have this gigantic boost, but while we're waiting for that boost, we see that the stock is not that volatile, and you're getting about a 3% dividend, which will keep to be increased. If you hold the share for 3 years, probably it will be at the current share price will be 4.5%, and that's a really nice return. So the stock can basically, in my opinion, it can attract both the innovative growth investors and the value investors in coming years, and that's something that I'm starting to see now. That's why I like this stock more and more. And of course, they also say they are encouraged by the CHIP Act. which has accelerated their investment plans to build more factories. They're also gaining momentum in Europe, and they also have plans to accelerate in Europe. So let's see where this takes them the next years. That's really important to me. So we're seeing for next year the price over earnings is trending down. It's moving on from a really nice price over earnings of 10, which is pretty much unheard of in technology sector, to 13, which is still a really nice price over earnings. And then we're also seeing their sales is trending down, and that's why 2022 will not be such a fun year because nobody likes to see sales trending down. But that's okay. That's really okay. And I'm going to tell you why, because of all these investment plans the coming years, and the raise of they keep raising their dividend. So as a value investor or a growth investor, if we look at their revenue increase, so yeah, for 2022, not so nice. But when we're looking at 2023, that's when we first will see an increase, and we're going to see an acceleration of that all the way to 2025. And your analysts think we might get back to 55% margins in 2025. And what they're also predicting here, that I saw somewhere, how the dividend per share. So they think the dividend per share could increase. That's a really nice increase from 1.4 to 1.85. Yeah, like a 30% increase. So that's also a nice thing. Intel has been very consistent increasing their dividend, and even on the verge when they knew their net income is dropping, they're still planning to keep providing value to investors by increasing the dividend. So I think all those factors make it that I'm kind of liking Intel. And I think for this year, I see some good news, and that's the MobilEye IPO, and I see some bad news, and that the revenues can drop or be stagnant a little bit compared to 2021. So that's something that we have to look at. But I think 2022 might be a very good year to accumulate some shares. We might not see much spectacular things for the Intel shares, but we are going to end up in 2022 with a nice and better outlook for 23 and especially 2024. So, and that's why I think right now is a good time to accumulate the Intel shares, both as a value investor and as an innovative growth stock investor. Guys, if you watched through all the video, then thank you so much for watching. I really enjoyed to make these videos. I hope you enjoyed watching them. Keep in mind, this is not financial advice. Please like, please subscribe, and see you next time.